Hello and good morning, folks. I am Ryan Faloona with the Benzinga Pro team, and I am here with the one and only Jonathan Mallard. Jonathan, happy day after Coinbase direct offering. I hope you're doing well today.
Hey, I'm doing well. I didn't get caught holding a bag on Coinbase, so it's a good day.
Neither did I. In fact, I was just scalping lots of 15 shares yesterday and stayed green. Very small, but at least I got to say I participated. Not playing those IPOs and those direct offerings on IPO day can be kind of a risky group, so I try to keep it small. Now, I understand that you actually have an analyst ratings based strategy that you are going to walk us through today. Is that right?
Yeah, that's correct. And it's not a day trading strategy. It's really just a matter of, hey, what happened with analyst ratings in the past 3 weeks? Where there's some positive ratings, and this at least gives me a starting point of where I can do some more research, take a look at the charts, take a look at the news, and dig a little deeper. The first thing that you would do is you would open up the calendar tool. So if you had a blank workspace, you just go over to the calendar tool here on your left-hand navigation bar. And you can see that I brought up my analyst ratings calendar here. Now, it might show you the earnings calendar at first, but then you would click on this drop-down menu here and just go to analyst ratings. And the default setting is to just show you for today. So what you have to do is click on the date range, and then, like, I already selected the 3 weeks, but you would click on today's date and then go back 3 weeks, and then you'll see the analyst ratings for the past 3 weeks. And then you'll also notice that I just removed some columns here. So I just went over to my columns button on the far right-hand side because I really wanted to focus in on just the symbols and then the ratings. And then the last thing that I did is I went to the filters button, and that's on the far right-hand side underneath columns. And I went to the ratings filter. Now, there are quite a few different names for these ratings because each analyst firm thinks they're special and they just can't be simple. So anyways, you have to kind of interpret, all right, so neutral is the same as pure perform, as the same as inline, as the same as hold. But I got rid of everything except for like the buys, outperform, overweight, etc. here. So, we're looking at a whole bunch of green right here. Now, the next step is within the past 3 weeks, I want to find stocks that have a minimum of 3 positive ratings. So the next step here is this would be all randomized in chronological order. So I guess it's not so random. But then you just click on the symbol column to order it by symbol. And so now I can just scroll down here and I can see, all right, where this came up in a few different examples recently. We've got applied materials. I've got AME here. So look at all these ratings on applied materials. So this is where, okay, maybe I want to take another look at this company. So I just click into that company, and that brings it up on the right side of my screen in the details tool. And for me personally, the first thing that I would want to do is take a look at the chart. So probably the day chart to start off with, because I want to see, okay, what has this been doing over the past 3 weeks? And as you can see for AMAT here, there was a big run up and then it sold off a little bit. So that's just something to keep into consideration. And then there are some nice support levels down here as well. So now I want to compare this current price. It's at 133, 134 bucks, and then also keep in mind where it ran up to earlier, about around 145. I want to compare that to the price targets given by these analysts, because the last step here is you want to make sure that there's at least a 10% margin in general, a 10% difference between the current price of the stock and the price targets that these analysts are giving for the next 12 months. I mean, who knows? It might only take 1 month or less, but these price targets are to keep in mind for the next 12 months. So as we look here, and granted, some of these were earlier than others when they made the price targets. But basically, I would just take all of these. Let's see, 155 at the top. My computer's being kind of slow there. All right, 155 all the way down to 160. The high here among these ratings is 195. And so basically, I would just average these out. So I just pull up my calculator and average out the price target between all of these, as long as everything else was looking good. And if I liked what I saw from the chart, I could click over to the news, see what's going on with any news items recently. I could take a look at peers and take a look at the sector. But if I like what I see, then I just average out those price targets. I buy it from my brokerage, and then I set a sell limit order to just sell it whenever it reaches that price target. And then if you could also put a stop in there as well as needed. So this is just a very, very simple way to build your portfolio, see what other professional analysts are saying about a stock, or you could use for a watch list. Let's say that you're building a watch list with the Benzinga Pro happy hour. And so you're seeing what everybody else is saying about these stocks, and you just want to see what different sell-side firms are saying about those same stocks. Or maybe you're watching Zinger Nation Power Hour or Get Technical with Neil. Throw all those stocks in a watch list and then filter your analyst rating calendar by watch list. Like right here, I've got some Coinbase plays, maybe some stocks that would be trading around Coinbase, around crypto, and immediately I can see what different analysts are saying about that stock. So hopefully that's helpful for someone, but it's really been great for me just to add to my portfolio.
Jonathan, real quickly, if you could go back to the chart on applied materials, I got two things that I'd like to mention about this particular strategy. First of all, I feel like AMAT is a great example, because if you take a look back recently, you can see the moves that the stock is making. Right, it kind of trades up, and then it sells off a little bit, and then it trades back up and sells off a little bit, and then recently it traded back up, and we're in that process where it's kind of pulling back a little bit. To my eye, it looks like the next move here is going to be a move towards 150, and given the price targets and the analyst ratings that you just pulled up, it looks like it's confirming that, right? So this is that's a really great spot, and it sure looks like you're going to be making that move here coming up pretty soon. And I think the other thing that I really, really like about this particular strategy is that everything you outlined doesn't require you to sit in front of a computer and watch every tick of this particular stock. And that can be incredibly helpful for those of us that have other work responsibilities throughout the course of the market day. I do stuff like this too. I take trades where I don't actually have to sit in front of the computer. And I think in this case, you've done quite a bit of good due diligence and a little bit of charting and combined data points into a real nice trade plan. So I definitely think that this is helpful. When I was first learning, I had to do this, right? I had to take a step back. I couldn't watch every tick. I was so up and down with every tick. I had to come up with a way to actually be able to trade without having to watch every tick. And I wish I had this available to me at that time. So great stuff, Jonathan.
All right, yeah, thank you. And it looks like we have some tickers in the chat here. Sorry if I missed anyone. I think Adrian was toward the top with WHLM, and then we've got MUDS from Matthew, and then SPCE as well. So
yeah, I'm sorry. I was going here. I was looking at space here. It's getting punished today. Virgin Galactic, Richard Branson sold a decent chunk of shares overnight, or not overnight, in the last few days. It was disclosed overnight.
$150 million stake. That is not insignificant. That's definitely sizable.
Yeah, 10%.
One of the other things that's going on right now is there's that esports betting app, EBET, right?
Yeah, this is
EBET. This is what's funny about this is that one of our community members actually brought this up the other day at the happy hour and prepared everyone for this particular IPO. This thing's absolutely nuts, right? This thing IPO'd at what, $6? Looks like it's halted at 30 there.
Yeah,
something weird is going on with this chart here. Sorry about that.
No, it's the IPO, Jonathan. Today is the first day that it's been trading. Yeah, no, it's really it's crazy. And the thing is, we talked about these on the happy hour. I encourage everyone to join because you could have been prepared for this. We talked about this. One of the things to keep in mind is, especially with this particular stock, is how low the float is. So be real careful if you're trying to flip this. Maybe reduce your size so you can control your risk a little bit more accurately. This seems to be one of the hot stocks of the day here, though. So I suspect there's going to be opportunities all day long. I'd like to see it stop halting, but we'll see what ends up happening.
It's a great point. It was Matt Hammond who brought that up on the happy hour. He also brought that up on pre-market prep on Monday. Yeah, this is like a 2 million. They're only issuing 2 million new shares,
right?
So, like super low float, which means weird things happen.
Yeah, no, absolutely. It was one of our BZ Pro members. It wasn't yesterday. It was actually the day before yesterday, right? So Tuesday said, hey, that this is coming. This might be a wild one, and everyone keep an eye out. I actually hadn't heard of it prior to that. So, and then here we are on IPO day, absolutely going crazy. And with space here, this is what do you think here, Spencer? When you see CEOs like that, drop large, significant stakes, what is your initial plan? You're not trying to like run on the short and try to continue to short this down. Are you looking for entry to the long side? How do you view news stories like that?
I would look for an entry if this was a stock that I liked and it dipped on an event like this, then hell yeah. But in this case, this is not a stock that I like.
Gotcha.
So gotcha. But I also note that Richard Branson selling, a stake. It's not as if he woke up one day and was like, "Oh my God, I got to get out." Right? He filed a plan. It's called a 12B1 plan with, I think that's what it's called, with the SEC. It's basically protecting him from any insider trading accusations. He's saying, telling the SEC, "Hey, SEC, I'm going to sell X amount of shares over a certain period of time." And that's what this was a part of, right? This is a pre-planned sell. So it's new information to the market, but this was not a spontaneous thing. Also, there's a million reasons under the sun to why you'd want to sell your stock. For all we know, he's like, building a spacecraft for his backyard.
Heck, he could want a new suit. Yeah. It's a lot, like you said, there could be any reason why they're selling this. I'm looking to play this for a bounce, honestly, given the fact that this was a planned sell. It's just new information to the market. It seems like a knee-jerk reaction to me.
Born to be Free has a nice comment in the chat here. Let's see, I think I can highlight that. Am I able to highlight it by clicking on it?
You should be able
working
to.
For me.
Well, all right. No one.
Anyways, there we go. So is most of this whole thing works on his ideas, and if he's selling, I'm not buying. It depends on the company, right? So if Elon Musk sold half of his position of Tesla, that might change my idea on Tesla, right? Versus that's a lot different from like, I don't know, GM. If an executive at GM sold their position there.
I hear that point. But I would just reiterate that there's a million reasons to sell. Him selling is not necessarily indicative of a change in point of view or belief in the company. Mark Zuckerberg, and I know this isn't the same thing. Mark Zuckerberg does not mean as much to Facebook as Richard Branson means to Virgin Galactic or as Elon Musk means to Tesla. But Mark Zuckerberg has unloaded a massive amount of Facebook shares in the last 2 years and is doing it for his charity, right? For that the Chan Zuckerberg initiative. So, Branson selling, I guess, is notable because he's the founder of the company, but it's not as if he's saying, it's not as if he's Chamath and he's exiting out entirely, right? He's still the largest shareholder. So I would call it.
And just so everybody knows, you could find orders, events like these under the SEC filings. So you can see here, I'm under the news SEC filings, and then you can see that he sold the 5.5 million shares at an average price of $26.92.
Yeah. All right, guys, how can people learn more about Benzinga Pro?
I can head on over to pro.benzinga.com and get started on a free trial that doesn't even require a credit card. And then you're going to get the VIP treatment from Jonathan and his onboarding team. And you're going to get the VIP treatment from me and my team if you need any help. So that's what I would recommend. Go get a trial started right away.
All right.
Sounds about right.
Ryan Faloona, Jonathan Mallard from the BZ Pro team. Thanks a lot, guys. All right. Time for a news desk update. Let's bring on Othon. Oh, welcome,
hey,
man.
How you doing?
Good. How you doing?
I'm good. I'm over here just, trying to keep you guys updated with some of the recent news. So
always like the flyest dresser on the news desk. I mean, you're like the best dressed person at Benzinga, honestly. Sort of.
I was thinking about cutting this so I can look much more slick, but I was like, I'm trying to grow a beard, so I'm like, it's gonna look good. I'm trying to be like you a little bit.
Wait, let me see that.
It's coming along. So soon I'm gonna be just like you, Spencer.
Oh man, I like it. Oh, you're also watching Space today.
Yes.
What are your thoughts?
I mean, okay, so like what you guys were saying earlier, I was watching what you guys were saying about, there's no reason to understand why he sold them. Like, he didn't give an explanation like, I'm panicking or, like I need it for this. So it could be a number of things that we don't know exactly. And I mean, see, like company executives will do that, but it's like, it is a little bit alarming. So it's good to watch out and see what's going to happen in the near term future. But we'll have to keep an eye out on this one.
Yeah,
exactly why this move came
here. I mean, like it was down all morning, but it's getting punished after the open.
It's right around like 9 o'clock when the open happened, 9:30. That's when it really torpedoed down. So
yeah,
I mean, it was kind of holding its ground. You could see like in kind of right like. Not a little bit right there, like it dropped and then it kind of like was hovering around right there. Yep.
Yeah.
And then it's around the open and just tanked again. So
yeah, super notable. All right, there are other headlines, a lot that we didn't get to on pre-market cap this morning. Other news headlines. What else is on your radar?
So what was on my radar is Thermo Fisher.
Oh, we didn't get to this today. Yeah, TMO and what
PPD. So Thermo Fisher said it will acquire PPD for $47.50 per share for a total of $17.4 billion. Both companies are trading higher on that. So just something to look out for, a merger going on there. Another thing that's on my radar is Rite Aid. So they are trading lower after the company reported worse than expected earnings. So, this...
What were the numbers on that? I didn't even look at it Rite Aid this morning.
I don't have the numbers right on hand, but I know they reported worse than expected EPS results. Can you scroll down a little bit?
Let's go. Let's look at it here. So
it missed by 0.2 cents on EPS.
So they missed by a smidge. They missed by 2 cents. Their sales beat. They gave Q1 sales guidance. Looks like that was above estimates. And yeah.
And the funny thing about this is if you look right above it in the pre-market, it was trading higher and then it reversed at the open. So it was significantly like noticeably higher. And then right at the open, you see that big candlestick right there, that red one. It just plummeted after that.
I always look at how a stock traded into its report just to get a feel for the trend. This chart is freaking weird.
That gap down there, and then just another. This is a backwards V. Yeah,
this is a weird one. Yeah. All right. What else you watching today?
Delta Airlines earnings. Yeah, that one's down also with worse than expected Q1 EPS, which I mean it kind of should be expected because right now they're not open. Like we're hearing all-time record numbers, especially here in Michigan where we're located with coronavirus. Yes, the vaccine is getting rolled out, but with some iffy news, like with Johnson & Johnson, like it's gonna, people might be a little more skeptical while traveling. We'll see, but we're not out the ropes yet with traveling. So
also pay attention to like what the stock did. It's been on like again ahead of the report. This thing was a beast in January.
Yeah,
and the entire stay at home. I'm sorry, the entire reopening trade has sort of come off here anyway in the past week or so. Like if you look at AAL, see the same thing. You can look at the cruise lines, see the same thing, right? They all rallied in January, and it's come off a little bit here in the last couple of weeks. So I'm going to go ahead and say that regardless of what Delta said, it wouldn't have mattered. They were going to trade down either way.
Yeah,
at least based on how the entire the entire reopening trade is happening right now.
Yes, I would agree with that, and you could see a little bit of profit taking in there too. Another big player is Costco. So recently, they raised their dividend from 70 cents to 79 cents per share, which, that's a decent size increase. And, that's what you want to look for in a long-term play. If they increase the dividend, that shows a little bit of confidence in the company right there, that they're willing to, give back to shareholders this way.
Quick story. I went to Costco over the weekend, and usually, like when I go to Costco, like I'm in and out in like under an hour, or like maybe even like a half hour.
Yeah.
We were at Costco, and we were there for probably an hour and a half, only because it was so crowded. The lines to pay was like through like at least halfway through the back of the store. It was It was insane. It was mad. Yeah. It was so bad. I'd never seen Costco that busy in my life, and I've been to Costco on like busy days, like Super Bowl Sunday or whatever, and I've never seen Costco like that on Sunday. It was madness. But look at this. We talk all the time about like buying good stocks on pullbacks. This was a classic case of that. If you like Costco, and I do, but I don't own the stock, this is just a classic opportunity to just come in and just buy the stock for cheap. That
300 level mark right down there. Yep.
Yeah, I mean just
got it back.
Classic. Yeah, gained it all back. All-time highs are in sight here. All-time highs were from November at 390. We're not there, but we're in sight. We've sort of gained back all those losses from February and March. Just a classic dip buying opportunity. But again, what does Costco have that stocks like Space don't? Like Costco has real revenue.
Yeah.
And you can see they have so much revenue, so much earnings that they're giving it back to shareholders. They're raising their divvy.
Yeah.
So like real revenue, real cash flows, not a shot in the dark.
And that's what I feel, investors want to see. They want to see like, definition of a blue chip stock is, when they keep increasing dividend over time, that's a big thing to it to help, it shows that they're making more money that they're able to give back in a way that they're able to say, you know what, we made a lot of money, we can give some back to our investors. And that's what I feel like people want to see. Another one that I also want to talk about is a little bit of banking. So Bank of America.
Yeah.
They had earnings also. But the funny thing is they beat, and yet the stock is down almost 4% right now. So they issued better than expected Q1 EPS and sales results, but they're down right at the open. It's like a trend. All of the ones we talked about, right at the open, one big red candlestick straight down.
Well, the same thing happened, kind of, I guess not really with Goldman Sachs. It happened with JP Morgan, though.
Yep.
Same thing.
And I believe Citi was also one of them.
So the Citi chart, all the banks trade together. All the banks trade together. So like yesterday we had Goldman Sachs, which had a huge beat, and I guess it held up during the day more or less. JP Morgan sold off a bit on its report. You had Wells Fargo sold off a little bit on its report yesterday. Then today you had Bank of America, which that big red candle there. You had Citi, big red candle there. So all the banks are just trading together. They're giving back gains made in the pre-market session from their earnings. And if you look at why, Actually, I don't really have a good reason why. I'm just, like the banks have been in a consolidation period for a month here, or at least a few weeks.
Yes.
I don't know. This isn't a case of like, look what happened last quarter, right? Like last earnings report, you can see
up to the earnings, it was going up.
You can see that was the earnings report right there. That top tick, and then it served as a catalyst for a change in trend. And this time, they've been moving sideways, and for the moment at least, it's a downward trend. But let's see how it rebounds during the day.
Yep. I mean, the first 30 to 45 minutes is like where a lot of price action is going on. So, I mean, it could reverse, but just like yesterday, I mean, look, beginning of the day, it made all the moves, and then it just kind of flattened out. So,
right. So that appears to be happening, at least on the 15-minute chart here. You can kind of see a base forming, at least for the day, which is notable. Any levels we have here? Not really. Not really. I would look at like that triple bottom. What's that? 30. The mid to high $36 range. But we're a long ways off from that. So I would maybe lean on that. But we've seemed to have found a bottom, at least for the day. What else is on your mind here today?
I got one more.
Yeah.
And this one, it's been very volatile.
Okay.
It is GameStop, GME. Since
heard of it.
When they reported a 3.5 million share common stock offering, it's been all over the place. Like, just look, it went down, it regained it, and then it came back up. Now it's down a lot again, but it's very volatile recently. Like, it kind of flattened out for a little bit after the big rush. And it was actually holding, which is still shocking to me because it's still holding over $100. That to me is very shocking. Following a downgrade, following an offering, it's still holding above $100. Which all I gotta say is anybody who's in there, be careful. Like keep a close eye on this because anything could happen. It could go up to $300 in one day. It could go down to $50 in one day. So this is a very,
But the fact that it's held up, I just saw from the chat, it's a good point that the CEO just had to give up some shares that he had in the form of an incentive that they didn't reach. But the fact that it's held up so long, that should. I mean, I hear your point about that the stock can do anything because it's GameStop, but the fact that it's held up to these levels should give you a sign of confidence, no?
Yes, but like we even seen it with some of the banks, how it's just consolidating. It's scary. That's what I have to say about this. Like for me, looking at it, it's scary when it's just going sideways. Because I'm used to it going like by looking at this whole year charts, it's just been going straight up, straight down. So you're kind of like used to it. When you're going just sideways like it is right now, it's like it's nerve-wracking almost. You don't know what to expect in the next minute, So personally, I mean, I don't like that, intensity or that moment of waiting and anticipating what's going to happen. I like to see it when it's like in the action. But I mean, there's a big opportunity here for people who know how to handle it, So,
all right, Othon, Economopoulos,
you got it right.
The best dressed man and the man with the longest name here at Benzinga. Oh, always a pleasure, sir. Get back into your cave and post some headlines.
Thank you.
All right. All right. It's 11 o'clock. Time for SPACs Attack. They have an interview today, and I should have mentioned this earlier, and I neglected to, so I apologize. They're talking to the co-founder and co-CEO of Origin Materials. Well, actually, they're talking to both CEOs of Origin. ORGN is the ticker there. That's going to be on SPACs Attack in about 15 minutes or so. 11:15 they'll be on. But the show itself is starting now. So go ahead and smash that like button. Hit subscribe. Leave us a comment. Check out Benzinga Clips. And I'm going to hop off this stream. It'll redirect you automatically to the SPAC guys who should be live right now. And if they're not live, I'm going to be angry. So smash the like, and I'll see you guys a little bit later.